Hello friends, this is Raj Sastry from Raj Option Trading. Today is November 18, 2021. We'll talk about StoneCo. StoneCo is a technology company. They're into fintech. Their mission is to help their clients with their businesses and conduct commerce. Basically a fintech company. They want to help their clients. We got two images here from their website here. It really helps these small businesses and clients to help with their e-commerce solution, with their payment solution, and they want to be there for their customers from day one. So they got a very good aspiration here. Let's dig deep and see what we can do with StoneCo here. So let's jump in here, look at the company overview, look at major ETFs holding this company here, and look at the competitive landscape, and look at Brazil stocks here, and review few charts and see what we can buy right now, and then do a deep dive on StoneCo and look at their financial summary and do a final verdict here. Should we buy, hold, or sell? So with that, let's jump in here and get started. As you look through here, StoneCo, they're into fintech solutions here. They help with the they help work with the merchants and partners to conduct e-commerce here. I think overall it's really a fintech play, helping the businesses across Brazil here. And they also got a mobile platform and a cloud-based technology platform. So as you look through here, stock price is $20, came down very big time yesterday, and market cap is around $6.3 billion. As you look through the stock chart here, this had done tremendously well. I think back in 2020, stock took off big time, all the way from $20 to $90 or $95, as you can see here. But now, since 2021 here, stock has been going sideways, as you can, not sideways, it's going down drastically, as you can see here. Now it's going into the support level, which is around $20. So $20 is a good support level for this company here. It's broaching that support level here. I think that could be a good time to really start accumulating slowly. Even it's a good company, but looks like Brazil itself is undergoing some turmoil, as you know, and they've got high inflation rate and there is a high unemployment. That's why Brazil is not able to really grow nicely here. A lot of these small and basically the middle class families, they are unable to afford because of high employment. That's impacting companies like StoneCo and Pags. So I think that's where we have to slowly start accumulating companies like StoneCo here. I think they will do very well as Brazil economy improves and the unemployment situation improves. And from an analyst consensus perspective, this has got a strong buy or a buy depending on where you look at. Overall, analysts think it's a good buy here. And from a news item perspective, as you can see here, StoneCo tumbled 34% in one day. And looks like they did very well. They reported some quarterly loss. That's why stock dropped big time here. But from a revenue perspective, they did okay. It's just on the earnings side they did not do well. They surprised Wall Street negatively. That's why I think we have to look at this into a little more details and see what we can do with StoneCo here. Given stock had dropped big time here, and still company seems to be aspiring to become this great fintech company in Brazil. So with that, let's jump in here and get started. So the question all of us ask is really why StoneCo tumbled. As you can see here, we got StoneCo 1 day 34% drop, 5 day 28% drop. Even if you look at 1 year, StoneCo dropped 68%. I think most of these are related to Brazil's macroeconomic type situation with the high unemployment rate and high inflation rate. As you look through here, Brazil's fintech here, StoneCo dropped 34% after third quarter earning release. That's a huge news here. And from a revenue perspective, as you can see here, they did nicely. They did around 270 million US dollars, and it was up 57% year over year. That tells you they're grabbing the market share and growing nicely on the top line. But what happened was really on the loss side of the house. They had a net loss of $230 million here, or US dollars, I mean, and they also had to write down some of their investments. So that's why adjusted net income, because of all this situation, is still positive, but there is a huge write down and there is a loss here. That's why Wall Street, the moment Wall Street sees there is no bottom line or earnings, that's why Wall Street freaked out here and sent the stock down 34%. That's a huge downturn here. And StoneCo also paused its small and mid-sized credit product here, mainly because there are a lot of people in Brazil. They are defaulting because there is not too much employment. There's high unemployment, and folks are not able to really pay down their credit card dues. That's why they're pausing this small and mid-sized business credit product here, because they don't want to have this default and more write-offs in the future. And because of the pandemic here, Brazil is hit really hard here, causing angst in the StoneCo experiments here on these new products. That's why this company wants to experiment and try some new things, but looks like timing is not right now with the Brazil inflation high. There is no appetite for more investments into their research and development and growing the product at this time. At least in my mind, it's always good to improve, experiment, and then grow. But right now, Wall Street thinks that's not the right time. But if you look at a long-term view, that's the way to go. StoneCo is doing the right thing, but it cannot, please the Wall Street in the short term, because Wall Street wants to look at the revenue and the earnings, and because they're investing heavily, they cannot show earnings right now. That's why Wall Street freaked out. And as you look here, StoneCo's investment write down is related to its investment in Bank Inter. So that's where they're not doing great on their investment here. That's one of the reasons for the huge write down here. So that's why I feel like some of this could be one time, and some of this could be a little more longer term because they want to invest in their own platform, their marketing and whatnot. So I think overall, Wall Street freaked out big time here. I think investors like ourselves here, we should slowly start buying some StoneCo and take this as a buying opportunity. With that, let's jump in a little more and dig deeper. So as you look through StoneCo here, you got a great company here. They got fintech, financial services. As you look through here, they did very. Their goal is to really become this best financial operating system here, and they did good here. 72% of revenue is into financials and financial services, as you can see here. They're also working on the software and software solutions here. 21% of their revenue here, and they want to be the best workflow tool for Brazilian merchants. So overall, as you look through here, they want to be in the payment and financial services business. They want to be in the software business. In the software business, it's a subscription business. They can do very well with their cloud platform here. So overall, companies are aspiring to become this great company, and that's why they're investing in their platform here. So with that, as you look through the highlights of the quarter, they did very well from a total payment volume perspective. 75 billion Brazilian currency here, and they also did very well when it comes to the software here. Did very well on the software revenue, 16% higher, and their penetration rate, customer retention rate here is really nice, 99%. That's a great news here. And they got a 200 plus thousand active client base. That's also good here. Overall, by looking at the numbers here, if you for a moment, if you forget about their investments and the loss they did, otherwise the top line is growing very nicely here. Nice total payment volume, nice active customer base here, up almost twofold here, and bank active accounts is also grew by 4x here, and net ads, I think it's also nice here. So overall, from a revenue perspective and a growth trajectory perspective, top line is growing, customer base is growing. That's a good story here. And as you look through here, they got a lot of customers. They got As you look through here, got apparel, gas stations, cosmetics, food services, you name it. They got a lot of customers. I think they are doing very well by by working with these customers with their links platform here. They got some deep knowledge in the retail here that can help the company going forward. As you look through here, we got leadership. We got Tiago here, CEO, Chief Exec Officer here. He has been with the company in this role since 2016, and he was also doing multiple other things in the before. He was with with Apex Capital here, Apex Capital, doing this business strategy, investment structuring, merger and acquisitions, and he also founded Pag Taxi here. He's also an entrepreneur. That's why he knows the importance of investing in the business and grow. I think that's a good story here, even though Wall Street thinks timing is not right. So overall, CEO checks out. He wants to do the right thing, and he's got this entrepreneur spirit here. If you look through the conference yesterday, I think that comes out very well. He wants to be that entrepreneur and make this StoneCo the great company. He's not afraid to invest in the short, right now to grow long term. So with that, let's jump in here and get started. So as you look through here, we got a lot of these exchange traded funds holding StoneCo here. As you look through, we got our famous Cathy Wood with the ARC F here. She's holding a lot of StoneCo, as you can see here, $40 million of StoneCo here. And then you got here Russell Mid Cap Growth here. They're holding nice chunk of StoneCo. And as you can see here, we got Latin America ETF, Brazil. The Russell 1000. Lot of these big ETFs and small ETFs, they're holding nice chunk of StoneCo stock here. That's a good news here. I think Latin America in general, as you can see here, they're not doing great from a 1 year perspective, generally because Latin America is going through some high inflation type environment here and high unemployment environment. As you look through here, we got EWZ Brazil ETF. This tells you Brazil has got some macro situation going on. The overall Brazil ETF is down 19% in 6 months, and they're down 5% in 1 year. So that's why there's some shorter term macro situation going on in Brazil. That's also impacting stock like StoneCo here and also stock like PAGS. So with that, let's jump in here and get started. Let's first look at Brazil stocks and see what in general what are these Brazil stocks doing right now. As you look through here, we got all these stocks um, organized by 1 year performance here. As you can see here, a few companies here, they are new companies like ASI and Zenvi here. They don't have 1 year performance yet, but look here, we got ERJ, BAK, GGB, all doing nicely here. They got nice 1 year performance. Looks like in the in the business around the metals area, it's doing very well. You could buy some of these stocks into this into if there is any weakness here and take it from there. As you look through here from a RSI perspective, looks like BAK has got a low RSI, but they got a little bit high debt ratio. I typically love the stocks with a little bit lower debt ratio, like GGB here. It's a good one. You could buy GGB right now. Right now, as you can see, RSI is 54. You could buy this one on down days and accumulate. So similarly, you could look at other names here. You can look for a little bit lower RSI candidates, even PBR here that works here, low RSI here. You could buy that one too. And we got VALE. VALE is a good pick here. You could buy some VALE and stock it away. Given RSI is very low here, and stock has been pulling back a little bit, as you can see here. And as you scan through, we got few more names here. I also love BRFS here. It's a good one here. You could buy some BRFS and accumulate. And we got few more names you could look through here. Focus on low RSI candidates like SID also works here. You could buy some SID. That's also a good one here. And you could look at other names like ITUB. That's also a good one. Nice sales growth. Nice gross margin here. You could, nice net margin and also nice sales growth here. So, if you want to buy some of these names here, focus on low RSI candidates. And also focus on companies with nice sales growth. Unless you want to be a contrarian and invest in some of these newer companies, you could do that too. So with that, let's jump in here. One thing you notice here, there is nowhere StoneCo here because StoneCo's performance is even below negative, 6% here. In the next chart, you will see StoneCo at the bottom of the chart here. Look, StoneCo, not a pretty picture, down 68% in 1 year, down 34% in 1 day. Wow, that's a huge big drop here. We got to take a look here and see what's going on here. Look here, net margin is positive, company is making money, gross margin is positive, and quarter over quarter growth is negative right now. And as you scan through here, we got PAGS, which is which is again a competitor of StoneCo. It's at $32 right now. It also dropped, as you can see here. Yesterday it dropped here. This is also a good buy. You could buy both StoneCo as well as PAGS into this weakness here. Off late after the huge drop, PAGS is trying to recover, but yesterday we had a big drop here. I would recommend buying some PAGS as well as StoneCo into this weakness and slowly build a nice position as Brazil improves, situation improves in Brazil. These two stocks will be doing very, very well. They will bounce back nicely. And you could look at some other names here with the low RSI candidates. As you can scan through here, we got XP, low RSI. I think net margin is positive, $30 stock here. You could look at that one too and go from there. So what we'll do next is we'll do a deep dive into StoneCo and look at StoneCo into a little more detail. With that, let's jump in here. StoneCo, from a snapshot perspective, as you can see here, these guys are into technology, and analysts recommend buy right now. $20 stock, it dropped big time. It's down 78% from 52-week high. And as you scan through here, they got a short float of short ratio around 4.83% or around 5%, as you can see here. The relative volume shot up. Look here, stock dropped big time. The volume is 10 times higher than the average volume here. So that's that tells you a lot of people may be accumulating at this time. I'm sure some people are selling to get out of the stock here, but more people are buying here. That's why high volume, when the stock is dropping, it's a mixture. We look at the buying pressure and selling pressure as we look at options market in a minute here. Still, we have target price of $60 here. Look, stock is at $20. We have a target price of $60. Target might come down after the earnings now. Most of these analysts will revise the target, but generally, I think at these levels, it could be okay to slowly buy and hold some StoneCo. And as you look through here from a sales perspective, they're doing about $584 million sales here, trailing 12 months. Nice gross margin, 71.7%. Operating margin is also good. Net margin, I'm sure with the latest quarter here, this will probably drop much below here with their loss going on here. That's why I think this is trailing 12 months. This might drop as we go forward with the current quarter here. And they got nice EBITDA margin, as you can see here. And the earnings per share growth for this year is about 2% here, and they're also expected to grow nicely in the next year. So overall, from an analyst projection perspective, this has got a good revenue growth here, but this might change after this quarterly earnings. There will be some revisions going on. So as you look through here from a total debt perspective, they got some debt. It's manageable. And if the debt goes above say 0.8 or 1, I'll be a little bit careful here. Debt is okay. Given it's a fintech play, I think it's okay to have a little more debt, but it's manageable. They got a lot of cash, $2 billion cash here, and total cash, free cash flow is negative right now. I want them to improve the free cash flow situation here. As you look through, they got okay return on asset and equity. I want this to be double digit, but they're not there yet. As I look through, they got some debt here, not too bad. 1.5 billion dollar debt here. I think they should improve the situation as we go forward. As you look through here, operating cash flow is also negative. I think they should improve this situation also. And as you look through here, we got from a return perspective, this is a huge thing. Look, 1 day, 34% drop. 5-day 27% drop. It's in red when it comes to 1 day, 5-day, 10-day, 1 month, all the way to 2 year. It's negative. So almost everywhere it's negative right now from a return perspective. That's why I think Wall Street freaked out big time. Stock dropped 34% in 1 day. I would be slowly accumulating this and having a nice position here. And lot of institutions are still owning the stock here. 75% institution hold here. That's a good one. Insiders own about 16%. That's also good here. Institutions is selling a little bit. That's not too bad at all. So with that, from a snapshot perspective, company is doing well. There is some temporary weakness right now, given company wants to invest heavily into their platform, and they're not afraid of Wall Street freaking out because of their heavy investments. So with that, let's jump in here and get started. From StoneCo, as you look through by the numbers here, from a annual number perspective, earnings per share so far grew nicely here. I think this is going to drop a little bit after current quarter earnings, but overall, trajectory is on trending positive. And as you look through here from an annual sales perspective, this company knows how to grow top line. As you look through here, top line is growing pretty nicely. Nice clip here. And as you look through here, outstanding shares is pretty constant here, not a big deal. These guys are not issuing a lot of shares and diluting. These folks know how to manage their share count. And as you look through here from a quarterly revenue perspective, they're doing pretty okay here, a little bit low here in 2021, but I think revenue perspective, they know how to manage revenue here. I think situation is okay on the top line perspective. On the bottom line, this is where Wall Street is not super happy. Keep looking here. This is a quarterly operating expense here. Operating expense is growing. Think about general sales and administration expenses, and the capability or the product related expenses, that's growing here. This is why Wall Street did not like the picture. They're growing top line nicely, but they're even growing expenses more. That's the reason Wall Street freaked out. And as you look through here, quarterly income, they're doing very well here. This does not have latest quarter, but I think overall they're doing well. But in the current quarter, I think they did not have any income, so that's why it's a negative. Wall Street did not like that also. So with that, overall, in a nutshell, company knows how to grow the top line. They're doing it right now. They're acquiring now new customers. They're growing their customer base nicely. But on the expenses side, they are not afraid to grow their expenses in the short term to take advantage of the situation in the long term. That's why I feel like it's okay to invest, but I think probably they did not do a good storytelling in the earnings call. Wall Street is not super happy about heavy investments. So with that, if you look through some of these companies here and see what's going on, StoneCo, look here, stock is dropping big time. After the earnings, stock dropped big time. When this happens, on the balance volume also just dips here, so stock looks ugly. It's below all the moving averages here. That's why it's good to buy some StoneCo into this downturn here. Keep watching. Down big time, red all the way through 1 day, all the way to 1 year. Red right now. I would be slowly buying here, given RSI drop down here. And look here, IV percentile is 16. That tells you if you want to buy some long-term call options, you're not paying too much because IV percentile dropped here. Looks like in Thinkorswim platform, IV percentile is 51 here, and if you look through StoneCo, we got 16 here. So I think right now we should go with the Thinkorswim here 51%. I think probably let's not buy call option here. Instead, let's buy stock itself and take it from there. And then we got PAGS here. PAGS, as you scan through here, stock dropped big time maybe a couple of weeks ago. Now we're trying to see where to go after StoneCo dropped. This also dropped in sympathy. This is a good one to buy at these levels. I would buy both StoneCo as well as PAGS. We will compare these two stocks in a while and see which one is better. And we got a few more here. We got ERJ. It's a rocket ship doing nicely here. Off late, it's coming down. As you look through ERJ here, just $15 stock here. nice sales growth and nice gross margin. And as you scan through here, 1 month it dropped by 20%, but done nicely in 5 year. So you could 1 year, I mean, so you could buy some store, ERJ also here and accumulate. Look nice on the balance volume here. And then you got CIG here. CIG is an energy play. This also is a good one. It's a good trading stock, goes up and down nicely here. Right now it's on the downturn. Keep watching on the balance volume. Pretty steady here. You could buy this one also. This one has done nicely in 1 year, around 29%. Right now temporary weakness. RSI is 51. You could slowly buy this one also. And then we got few more here. We got GGB here. It's one of my favorite play here. Has been dropping, as you can see here. Nice on the balance volume. And GGB, as you look through here, done nicely. Nice sales growth, nice gross margin. Nice 1 year 33% here. You could buy this one. This is a good stock here. It's a, as you can see here, mid cap type stock here. $7 billion market cap. Petro here, Petro Brazil. This is a good one also, Petrobras. Stock has been trading sideways, as you can see here, and it's done nicely to 25% 1 year. Nice sales growth, nice gross margin. You could buy some PBR also. And you got CBD. CBD dropped big time, as you can see here. This one, as you look through here, did nicely. I mean, 23% for 1 year. And on the balance volume is pretty steady here. You could slowly buy this one also. And you got VALE. VALE is a great stock, goes up and down violently. Right now it's down. As you look through VALE here, it's done 15% in 1 year. I think this is a good one to slowly buy some VALE and sock it away. This sometimes act like a meme stock, goes up and down violently. So with that, let's jump in here and look at StoneCo into little more detail. Look here, we got it was $11 billion company back in 2019. It became a $20 billion company back in 630. Now it dropped back to $6 billion company. So from 2019 to now, the market cap dropped big time. There is a 34% drop, in just yesterday from a stock price perspective. That's why I think, the moment you see that huge drop, 34% in 1 day, I think, for a good company like StoneCo, you should ask yourself, am I a long-term buyer? If so, I would, buy and hold StoneCo. But if you want something, maybe for, say, next week, next month, StoneCo may not be the stock for you. But for a long-term play, you should slowly accumulate StoneCo and sock it away. As you look through here from a sales number perspective, I think sales is it was pretty good here. A little bit tepid right now, but I think top line, it's not an issue for this company. They know how to grow the top line. And from a sales quarter over quarter change perspective, I think it was negative back in 630. They're improving this situation also in the current quarter. And this company also does up and down from a earnings surprise. Sometimes they surprise on the positive side, sometimes negative. Wall Street is not able to gauge this company because they are not a consistent, predictable company when it comes to quarterly earnings. That's why Wall Street does not like it too much. When they announce nice surprise, its stock price goes higher. Like back in 2020, with a negative surprise, stock price goes down. It's an up and down type play here. Right now, it's down big time. You could buy and invest. From a cash situation, they got a lot of cash. They have some debt which is manageable, and free cash was positive before, but now with the latest quarter, it's a negative right now. Gross margin is good here, 45%. I'm sure this might be dropping off. We'll check in the latest quarter, but I think they're okay with the gross margin. The issue is with the net margin right now with their heavy investment. I think net margin and the earnings became negative in the current quarter. And as you look through here, from PE ratio perspective, a little pricey here, and also from a price to sales perspective, from a valuation perspective, a little bit expensive. So this is a quick snapshot for you. Not net from a revenue perspective, stock company doing well, and from an earnings perspective, it's negative right now. That's why Wall Street is not happy. We'll jump in and dig a little more. As you look through here, this is the earnings history, as you can see here, and they've been missing last 3 times, as you see here. March, there's a miss here. June there's a miss, September there's a miss. The moment this happens, the moment company misses consecutively like 2 3 times, Wall Street kind of discounts the company. That's why stock came down. Entire 2021, this stock kept dropping off. Look, because of this miss in March, miss in June, miss in September, and Wall Street does not like this. That's why the stock is down since entire 2021 here. And in 2020 here they did very well. They did some nice positive or EPS here. That's why in 2020 stock did very well. Stock reached as high as $90. That's why this company is not a predictable company from a quarterly earnings perspective. Now, that's one of the reasons. The moment you see three big misses here, stock is down. I would accumulate slowly. Look what happened back in 2019. Miss, then one more miss, and they did nicely back in 2020 here. So that's why the moment you see this year, you should slowly accumulate this company. Given it's dropped off very big time here, still nice gross margin 70%. I think companies trying to grow and invest in their own platform. Wall Street freaked out because there is a huge loss here and earnings per share is negative. So with that, if you look through the earnings transcript here, I will not belabor this. They missed by 3 cents here. That's why stock came down big time here. On the revenue or the top line, they beat by $10 million. That's very good here. As you look through CEO here, he wants to be this entrepreneur, and he wants to transform the Brazilian entrepreneur, helping on the e-commerce side of the house and the financial fintech situation. And he wants to be the positive force to transform retail and financial industry. The passion comes through in the conference call here. He's got his mind set at the right way. He wants to be the best company, and the CEO is not afraid to invest to become the best company. And total payment volume is nice. It's 54% year over year growth. That's always good. And they're also 26% quarter over quarter growth. I think that's a good growth trajectory here. The client base increased by twofold. That's also great. And their links, their links subsidiary or the links section or a division is doing great here. As you look through here, they did 17 times year over year. That's a great number. And the customer retention rate stayed very high at 99% on the Links core platform here. The revenue grew 57%. Subscription revenue grew over 300%. So from a top line perspective, this company has no issue growing. They're growing very nicely. They also reached 1.3 million active clients here, 2 times higher than the previous quarter here, previous year. I think overall they're doing very well. Wall Street freaked out because they said they're going to keep investing heavily into engineering, sales, marketing. The moment Wall Street hears the word investing heavily, they freak out big time. They want a short term gain, but this company is not willing to do that right now. They want to invest and take advantage in this little bit downturn in Brazil. They want to invest in themselves and get ready for a bounce back in the economy and be the strong player as they emerge out of this high inflation environment. And as I look through here, they've shifted most focus to building engineering. Here, I think as they build their engineering capabilities, that will serve them well in the long term. I think we should not be worried about short-term situation here. Focus on the long term here. And they also did very well when it comes to the service level here with the customers. It's an excellent rating on the customer support. I think that's a very good status here. Excellent from a customer support perspective. It tells you they're really doing well by their customers. As you look through here, technical perspective, stock chart, look, 2020 was a great year for StoneCo. Did very well. They went from $20 to $95. That's a huge, growth here. but look what happened in 2021. So drop, 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 now all the way to 20. Looks like for this company, $20 is a magic number, or as you call it, good support level here. That's why I will be, buying this company at these levels here and accumulating, as you go forward. And let's jump in here. Like, let's look at um, a quarterly or a 1 year picture here. As you look through 1 year chart here, stock has been, earnings here, earnings announcement, stock came down, earnings announcement, stock traded sideways, went up a little bit, earnings, stock down, earnings, big dive here. I think, last 3 or 4 quarters they did not do well from an earnings perspective. Right now, I think a huge drop with this loss here. We should slowly go and buy some. Given company doing the right thing, growing their top line, but they're investing into their own platform and their own capabilities. Stock chart is ugly. We don't need to look through detail. From a DMI perspective, this is one of my favorite indicator. The red line shot up here, blue line came down, tells you right now it's completely bearish. And on the balance volume as well as check-in money flow, both are pointing down. That tells you right now it's a bearish here. This is when the big players will slowly start buying here and accumulate. I think we should also do the same thing here. From an options perspective, as you look through your stock is at $20. You look at the $20 here, we got a nice 240 open interest here. Look, we got 1,200 open interest at $30 here. Folks are betting the stock will go higher. And even if you look further here, look at 35. We have nice 1,800 contract open interest here. $40, that's a huge 2,000 open interest. So in the options market, folks are betting this stock will go higher. And by April next year, folks are betting it can go to 30, 40, 50 and whatnot. And as you look through on the put side of the house, folks are also hedging a little bit. Open interest as you look through here, there's some open interest in the put side also, because folks want to be a little bit careful. Net, if you look through here, we got a call volume here, 35,000 contracts. Put volume is 20,000 contracts. Lot more call contracts than put contracts. That puts the PC ratio at 0.5. Anytime PC ratio is below 1, that tells you there are more buyers than sellers when it comes to call options. I think that's a good situation here. We should slowly take buy this stock and accumulate. As you look through here, we got stock prices 2070, and if you look through VWAP here, VWAP is 21.98. That tells you stock wants to go higher to this VWAP level. That tells you you can expect stock to bounce as you go forward. As you look through here, comparing StoneCo to PAGS, StoneCo and PAGS both are into fintech in Brazil. Both are competitors and both are doing nicely. Let's look through here, compare them. Look here, from a stock price perspective, StoneCo $20 and PAGS 32. From a market cap perspective, StoneCo is a smaller company after this huge big drop yesterday. PAGS is a $10 billion company. And from a volume perspective, average volume, StoneCo is a very liquid company, nice average volume. Even PAGS is okay, a little bit less compared to StoneCo, but still nice average volume here. Analysts are recommending buy for StoneCo and strong buy for PAGS here. So you get a good picture here. With this current drop in StoneCo, PAGS is a little bit bigger with the market cap. As you look through from a revenue perspective, look, quarter over quarter revenue growth is negative 13% here for StoneCo, positive 48% for PAGS here. And revenue growth, as you see here, PAGS is 10%, whereas StoneCo is 10%, PAGS is 53%. So PAGS gets a little more higher rate here in revenue from a revenue perspective. Now, from a gross margin perspective, PAGS is doing better. StoneCo is doing much better, 72% gross margin, and also nice from a net margin perspective. So companies are really doing well. But after this latest quarterly earnings, net margin will be dropping a little more here. So that's what happened with this huge investments into their own platform. From a free cash flow perspective, both companies have got negative free cash flow, as you can see here. And from a debt perspective, PAGS does not have too much debt, very low debt, whereas StoneCo does have some debt here. I think they should reduce the debt as we go forward. And let's look at valuation perspective. From a valuation perspective, PAGS is a little more cheaper here. I think a less expensive play here. And as you look through earnings per share perspective, I think StoneCo is pretty good here. And from a growth perspective, I think there is a nice growth projection this year for StoneCo, and also nice ROE, ROA. I think from a ROE and ROA perspective, PAX is doing better than StoneCo here. So in a nutshell, from a growth perspective, PAX has got a little more, StoneCo has a little more growth projection here in next year. I think that's a good one to know. And as you look through here, we got relative strength index here from a RSI perspective. Right now, StoneCo is 23, completely sold off, and PAGS is 35. From an IV percentile perspective, volatility perspective, right now, StoneCo, after the earnings, volatility shot up here, it's 50. You could also sell some put options and make some money that way also underneath the stock price. And same story with PAGS, you could do same thing here. Volatility is a little bit high. Generally, Brazil is a little more volatile now. That's why you will get some good premium if you want to sell some put option here. And from a performance perspective, both these stocks are red in 1 month, 6 month, 1 year, as you see here. StoneCo in more deeper red, compared to PAGS. I think both are great plays here. And as you look through here from a financial health perspective, both are in say C rating from Morningstar here. Growth, StoneCo has got a better growth projection here, and PAGS is not B here. And profitability, I think PAGS get a better rate. So in a nutshell, if you look through here, both are good companies, both are beaten down. StoneCo has got a little more growth projection, better growth projection, but PAGS is a little more profitable right now. If I were you, I would buy both StoneCo as well as PAGS. Keep slowly buying and accumulating a nice position in both names here. And with that, let's, what should we do now? We looked at technicals, we looked at fundamentals. What should we do now? So I think, this is a great opportunity to buy StoneCo here. Stock down big time after the third quarter earnings here. They're doing well from a total payment volume. It's increasing. They're doing very well when it compared to active client base, increased by twofold here. The subscription revenue grew by 300%. That's a great news here. Wall Street freaked out because they want to keep investing heavily into engineering, sales, and marketing. This is the way to grow. When the market is down, when the Brazilian economy is down, they want to take advantage and emerge as the strong player by investing in their own capabilities. That's the right thing to do, but Wall Street did not like it. They also want to focus on their capabilities. Again, the moment Wall Street hears investing and capabilities and engineering, stock drops big time. That's what happened. Wall Street is short-sighted, and this company wants to be the long-sighted company by investing heavily into their own platform. So with that, I think it's a great buying opportunity here. Accumulate, take advantage of this big drop here, and accumulate and go buy StoneCo. So with that, thank you very much. Happy investing and trading. Please subscribe.